Assalamualaikum warahmatullahi wabarakatuh. Hello, good morning guys. Okay, before I will introduce myself, my name is Yulandari. I am from Tanjung Pura University, courses of Economic Education. The topic of my talk is about adjusting entries. I want to start by definition of adjusting entries. Purpose of making adjusting entries, the various accounts that require adjusting entries, and then the adjusting entries form. First point, I will discuss about the definition of adjusting entries. Adjusting entries are journals created at the end of the period to adjust the value of the accounts of a ledger that has not shown the actual amount or balance before the preparation of the financial statements. Well, that's the definition of the adjusting entries. So, adjusting entries will be created if there are any transactions or accounts that have not yet shown actual amount. Let's move to the next. Second point, purpose of making adjusting entries. The purpose of making adjustment journal is as follows. Number 1, in order for at the end of the real account period, i.e. property, liability, and capital to show the actual situation. Number 2, in order that the nominal accounts, i.e. income and expense accounts, may be recognized within a period and indicate the actual circumstances. That's why an adjusting journal should be made, so that at the end of the book closing period, all accounts show actual value. Let's move to the next. Third point, various accounts that require adjusting entries. Not all accounts have adjusting entries at the end of the accounting period. The accounts that require adjusting entries are as follows. Number 1, prepaid expense. Prepaid expense are transactions that are classified as assets at the time they are incurred, but will become a burden in the future. Examples of prepaid expense accounts are prepaid rent, prepaid insurance, prepaid advertising, prepaid interest, and so on. Number 2, prepaid income. Prepaid income are were initially recorded as debt, but will be income in the future. Examples of acceptable income accounts are rent received in advance, interest received in advance, insurance accepted in advance, and so on. Number 3, accrued expenses. Accrued expenses are expenses which have become a liability in terms of time, but have not been recorded or made payment. Examples of accrued expense accounts include salaries accrued, accrued interest, and so forth. Number 4, use of equipment. The use of equipment is goods used for corporate activities that are used up within a period of 1 year. At the end of the period should be calculated how the equipment is used and how much equipment is left. Examples of equipment accounts are store fixtures, office supplies, and parts of it. Number 5, accrued income or income receivables. Income receivables are revenues which have not recorded or received the payment. Examples of income accounts to be received are accrued interest or interest receivables, accrued lease or rent receivables, and so forth. Number 6, depreciation of fixed assets. Depreciation of fixed asset is the reduced ability of a fixed asset to provide gradual economic benefits in line with the passage of time. Examples of fixed asset accounts are office equipment, store equipment, vehicles, machinery, buildings, land, and so on. That's why an adjusting journal should be made, so that at the end of the book closing period, all accounts show actual value. Let's move to the next. Okay,
We go to the last point, adjusting interest form. Nah guys, this is the form of adjusting interest and their position in the journal. Can you see on credit discharge position from each account? The conclusion of the topic I bring are adjusting interest credit to customized accounts that have not shown the actual number, and not all accounts require adjusting interest. Okay guys, thanks for watching my video. I hope what I say can be made for you. Don't forget to subscribe and like this video. Okay? Bye bye. Assalamualaikum warahmatullahi wabarakatuh.